The year is 1839, and the modern financial world is about to be born, not in the sterile banking halls of London, but in the humid, violent harbors of Canton, China. To understand the systemic collapse we face today, a collapse characterized by unprecedented debt, debased currency, and an elite class that grows richer from public misery, we must first rewind the timeline to the moment America's most revered families established the foundational playbook for dark finance. This playbook required a commodity that transcended all moral and legal boundaries: opium. The story of American fortunes is often sanitized into tales of industry and innovation, but peel back the layers of the textile mills, the railroads, and the great philanthropic institutions, and you find a toxic, high-octane seed: the vast profits generated by addicting millions to a drug. The problem the Western merchants faced in the early 19th century was simple yet crippling: the China trade deficit. China produced the porcelain, silk, and tea that Europe and America desperately craved. China wanted almost nothing the West produced. This massive imbalance meant vast amounts of silver. The universally accepted currency of the age flowed steadily out of London and Boston and into the emperor's coffers. This hemorrhaging of specie was a threat to the entire Western financial structure. It limited credit, constrained growth, and signaled a dangerous economic subordination to the East. The system was reaching its limit. The solution, orchestrated by the powerful East India Company and swiftly adopted by American trading houses like the Perkins, the Russells, and the Delanos, was a narcotic poison. They realized that by funding the cultivation of opium in India and then smuggling it aggressively into China, they could reverse the silver flow. They were no longer trading goods for goods, but rather trading a devastating addiction for the emperor's sound: silver currency. This was the birth of the Silk Road Syndicate. The American involvement wasn't peripheral, it was pivotal. The Boston-based merchants, known euphemistically as the China Hands, specialized in speed and evasion. Their sleek, swift clipper ships, funded by the emerging American banking aristocracy, outpaced British rivals and the slow-moving Chinese imperial patrols alike. These ships, like the Hukwa and the Himalaya, became the veins of the black market gold rush. They ferried cotton from the U.S. South to Europe, traded that for Turkish opium, and then raced across the Pacific to China, where the drug was exchanged for silver, which then flowed back to fuel the growth of Wall Street and the New England textile empires. It was the world's first truly globalized dark supply chain. The American elite, through the powerful Russell and Company, perfected the logistics of addiction, transforming it into a repeatable, high-margin, systemic profit engine. They didn't just profit from the crisis, they manufactured the crisis itself to restructure the global flow of wealth in their favor. This ruthless repositioning of capital, sacrificing the stability and populace of a foreign power for domestic gain, is the core elite blueprint of collapse we see, replaying in the modern economy. They trade real value for paper claims, public health for private wealth. This is not prophecy. This is pattern recognition. Now, let's rewind the economy and analyze the data. The transition from legitimate trade to the opium smuggling racket was facilitated by the structural weaknesses inherent in the Canton system. Weaknesses the American and British syndicates ruthlessly exploited. China had long maintained a policy of minimal foreign contact, strictly limiting all European and American trade to a small area in the port city of Canton, Guangzhou. All foreign merchants had to deal exclusively with a designated guild of Chinese merchants known as the Kohong. This system, designed to protect China's sovereignty and maintain its favorable balance of trade, was impenetrable to standard mercantilism. The West was desperate to unlock the vast consumer base of China, but the Kohong held the key, and they accepted only silver. The opium trade was the crowbar that pried this system open. When we analyze the data, we see the shift beginning subtly around 1800, escalating rapidly after 1820. The key players, notably the East India Company, created a massive supply pipeline of high-grade opium from their Indian territories. But it was the American clippers, independent of the EIC's monopoly, that injected competition and efficiency into the smuggling operation. Firms like Russell and Company, founded by the grandfather of Franklin Delano Roosevelt, circumvented every legal and moral constraint. They were not merely traders, they were financial engineers of addiction. Their financial innovation lay in their aggressive management of the global trade deficit. Instead of seeing the outflow of silver as a problem, they saw it as a temporary imbalance to be reversed through a manufactured crisis. The opium was deliberately pushed at rock-bottom prices initially, creating a market and destroying domestic production. Soon, the silver that had flowed into China to purchase tea and silk began flowing out not slowly, but in a torrential flood. By the late 1830s, the value of opium imported into China was far greater than the value of tea and silk exported to the West. The American and British elite had finally achieved their goal. They had reversed the silver flow, financing their continued industrial expansion, the American Industrial Revolution, on the back of a catastrophic foreign public health crisis. This is the blueprint that defines elite collapse engineering. First, identify a structural barrier to profit the Chinese trade surplus. Second, introduce a volatile, highly profitable, and morally compromised product opium. Third, use the ensuing social and financial chaos to force political change war. The merchants, who viewed themselves as agents of civilization, were in fact state-backed drug traffickers. They built armed warehouses outside the legal jurisdiction of Canton, used bribes and coercion on a massive scale, and were protected by the implicit and often explicit power of the British and American navies. The staggering reversal of the silver tide began to destabilize the very foundation of the Qing dynasty's monetary system. The Chinese economy operated on a bimetallic standard copper for daily transactions and silver for taxes and large-scale trade. As silver vanished from the imperial economy, sucked into the coffers of the Western merchants, its value relative to copper soared. This phenomenon, known as deflationary pressure on the lower classes, meant that the average peasant had to exchange far more copper coinage for the necessary silver to pay his taxes. The cost of living skyrocketed for the poor, while the wealth of the Western-backed syndicates consolidated. This manufactured economic violence was the direct prelude to the Opium Wars, a necessary trigger for the ultimate geopolitical collapse that would permanently reshape global power. This section of the blueprint teaches us that when the financial architecture of a nation is compromised by the relentless pursuit of offshore profits, the ensuing social decay is the intended collateral. The Opium Wars, which were triggered by China's desperate attempt to halt the silver drain and protect its people from addiction, provide the historical parallel that directly illuminates the current state of global financial collapse. This comparison is not about moral equivalency. It is about recognizing the mathematical mechanics of currency. Debasement orchestrated by an external power for private gain. In the 1830s, the Qing government finally recognized that the opium trade was not merely a social crisis, but an existential monetary crisis. Commissioner Lin Zexu's decisive action, confiscating and destroying over 20,000 chests of opium in 1839, was a legitimate, sovereign act to protect his nation's financial and physical health. The Western response, led by the British and tacitly supported by American interests who had millions invested in the trade, was immediate, overwhelming, and framed as a defense of free trade. This is the critical historical mechanism. The use of military force to enforce the elite's chosen financial architecture. The subsequent treaties forced upon China Nanjing 1842 and Tianjin 1858 did far more than grant Britain Hong Kong and open new treaty ports. They legally embedded the mechanism of China's financial subjugation. China was forced to pay massive indemnities in silver, further accelerating the outflow of specie. Crucially, the treaties imposed fixed, low tariffs on foreign goods, effectively preventing China from protecting its domestic industries or regulating the flow of foreign-produced opium. Now, let's draw the parallel to our current environment. The Qing collapse was directly linked to the destruction of its currency standard. The mass exit of real silver, which created uncontrollable internal instability. Today, we face an analogous, yet inverted, threat: the engineered destruction of fiat currency value through unlimited debt expansion. Where the Opium War syndicates drained China of silver, a fixed, real asset, the modern financial elite, the central banking cartel and sovereign debt managers are draining the wealth of the average American by flooding the system with debt and digital money. The effect on the working class is identical, a debasement of the purchasing power of their labor. The peasant in 1840 had to exchange increasing amounts of copper, his labor's worth, for the scarce silver to pay his taxes. The worker today must exchange increasing amounts of paper dollars, his labor's worth, for the same amount of real goods, like housing, food, and energy. We call this inflation, but it is structurally the same collapse mechanism, a transfer of real wealth from the productive class to the asset-holding elite via a manipulated monetary standard. The American opium merchants used their ill-gotten silver to capitalize Wall Street banks and insurance companies, laying the foundation for modern finance. In our era, the modern elite are using the crisis of unlimited leverage and quantitative easing QE to absorb real assets, real estate, corporate equity, commodities, while the middle class is left holding debased fiat currency and unsustainable debt. The opium trade was the initial stage of financial imperialism that broke a sovereign power. The contemporary model uses the weapons of debt sovereignty and central bank liquidity to break the financial spine of the domestic population. The pattern of elite profit maximization at the expense of systemic collapse remains constant. The ultimate outcome of both the Qing dynasty's 100 years of humiliation and the current global sovereign debt crisis is a pre-programmed redistribution of wealth upwards, enforced by the very system meant to protect the public. The blueprint holds. The legacy of the opium fortunes is not confined to dusty history books. It is the dynasty of profit that still dominates modern American finance, politics, and culture. Understanding this lineage is essential to grasping the current stage and elite positioning within our impending collapse pattern. The vast, illicit wealth accumulated by families like the Delanos, the Forbes, the Perkins, and the Russells was immediately laundered and invested into the emerging legitimate industries of 19th century America. This was the first great capital flight from the black market into the white market infrastructure. Opium silver funded the textile mills of Massachusetts, creating the great New England industrial base. It capitalized the burgeoning Wall Street banking system. It built the railroads and funded the philanthropic institutions that cemented these families' social power, conferring upon them the unassailable veneer of respectability. The Skull and Bones Society at Yale, for example, which has funneled countless members into the highest echelons of U.S. power, reportedly received its seed money from the opium syndicate profits of the Russell family. When we analyze the data today, we see the modern iterations of this historical pattern, specifically in how the elite are positioning themselves for the next systemic shock. Just as the 19th century merchants converted drug silver into real physical infrastructure, today's elite are converting fiat-inflated paper wealth into real, scarce assets, a crucial preparatory move before the currency collapse accelerates. This positioning is multifaceted. First, there is the land acquisition spree. Institutional investors, often tied to dynastic wealth and central bank liquidity, are systematically buying up massive tracts of prime American farmland and single-family housing. The price of this positioning is the increasing inability of the average citizen to afford the core necessities of life. By turning shelter and food production into financial assets, the elite insulate themselves from the collapse in purchasing power that they themselves are engineering through debt monetization. Second, consider the digital transformation of currency. The push towards central bank digital currencies (CBDCs) and the simultaneous institutional absorption of hard assets like Bitcoin and Ethereum serve a chilling duality. The opium merchants controlled the physical flow of silver. The modern elite seeks to control the digital flow of value and the behavioral compliance of the population. If the average citizen is confined to a programmable, expiring digital currency, while the elite have their wealth stored in untouchable physical assets and decentralized value stores, the power disparity becomes permanent. This is not evolution. It is control. The current economic stage is characterized by record wealth disparity overlaid on record sovereign debt. This is the perfect environment for the opium blueprint to complete its cycle. The system is intentionally being run hot, pushing debt limits and fueling asset bubbles, ensuring that the inevitable crash which the smart money can predict, hedge, and even trigger will wipe out the leveraged middle class while transferring the final remaining core assets, housing, land, prime corporate equity into the hands of the already rich. I look at the historical records of the opium merchants, funding Harvard and constructing grand estates with money derived from mass addiction, and I see the exact same ethical and strategic calculus applied today. Crisis is the ultimate tool for consolidation. The crisis is not accidental. It is the necessary clearing event required to finalize the transfer of power and wealth to the next generation of the dynasty. Our job is to recognize that we are in the endgame of this cycle, where the monetary system is being debased not by the outflow of silver, but by the reckless inflow of paper, engineered to collapse the value of every hour you work. We now stand at the precipice of the cycle's inevitable completion. The historical pattern manufacture a crisis opium, debase the monetary standard silver drain, use military/political force to enforce the new system treaty ports, and consolidate wealth. Industrial capital has been perfectly executed in the modern context, substituting debt monetization for opium profits and regulatory capture for military force. This brings us to the inevitable financial reckoning and action. The reckoning is no longer a question of if, but when and how violently the system corrects the massive imbalance created by 2 decades of infinite debt. The current environment is saturated with debt, corporate, consumer, and most critically, sovereign debt that can never be repaid with dollars possessing today's purchasing power. The financial elite, descendants and spiritual successors of the opium syndicates, have already executed their exit strategy. They are positioned in hard, non-dilutable assets. They have purchased the land, the gold, the energy infrastructure, and the core productive corporate entities. This leaves the average citizen holding the liability side of the ledger paper assets, fiat savings accounts, and rapidly depreciating dollar-denominated wages. The collapse will manifest not as a sudden stock market drop, but as a severe, relentless erosion of purchasing power, a silent, grinding destruction of the middle class's ability to maintain its standard of living. This is the final stage of currency debasement, where trust evaporates, and the paper money that represents your life's labor is rejected by the market as a store of value. The ultimate warning derived from the opium fortunes is this: you must stop playing the game the elite designed for you. The historical pattern shows that the system is engineered to extract wealth from the public during moments of systemic stress. Your action must be a strategic pivot away from the collapsing financial architecture. Firstly, acknowledge that cash and traditional savings accounts are liabilities, not assets, in a hyper-debt environment. The only defense against the elite's engineered inflation is to hold scarce, non-fiat, non-political assets. This means shifting wealth out of the digital ledger and paper claims that can be inflated away by central authority. This includes real, productive assets you can control, whether it is physical silver and gold, self-sufficient energy and water resources, or essential professional skills that remain valuable regardless of the currency value. Secondly, you must focus on decentralization and relocalization. The opium syndicates centralized the global flow of capital to Boston and London. The modern collapse pattern reinforces this centralization through global supply chains and digital currency controls. Your survival strategy involves creating local resilience. Local food networks, community-based skills trading, and reducing reliance on the fragile long-distance supply chains that the elite leverage for control. The blueprint is clear. The collapse is a controlled demolition of the purchasing power of the masses, designed to finalize the upward transfer of wealth initiated by the original dark fortunes. When we study the ships sailing from Canton loaded with silver and the empty pockets of the addicted millions, we see a mirror reflecting our own time. Your preparedness is not about predicting the day the clock strikes zero. It is about recognizing that the wealth transfer is already in motion and ensuring you hold value that the central planners cannot print, cannot confiscate, and cannot dilute. The great dynasties of American wealth, born of opium and exploitation 2 centuries ago, established a permanent fixture in the architecture of finance that vast fortunes are forged, not lost, during periods of extreme systemic volatility. The wealth we see consolidated in the hands of the few today is the logical, chilling conclusion of the blueprint drafted in the muddy waters of the Pearl River. The choice is no longer between optimism and pessimism. It is between informed action and systemic victimization. The game is rigged, but the history books provide the cheat sheet. Prepare now, for the final reckoning will distinguish those who held paper claims from those who hold real, defensible value. The collapse is not merely an event, it is the ultimate wealth transfer mechanism.